roughly about 20% of the world's oil and gas transits through that space. There's going to be a point where there is going to be a systemic impact, which is going to have a longer, more durable consequence to the economies of the region. The U.S. was smart or fortunate, depending on how you want to categorize it, in the build-out of LNG production. That's to their benefit.
U.S. markets simply are getting used to Trump, where volatility has become part of the norm.
Today, we're starting with the biggest story in this newsroom and in newsrooms around the world, which is the U.S. and Israel's attack on Iran and the Iranian response attacks on neighboring countries.
A lot has been happening there. You've probably read a few headlines, but we are going to zooming in on the fact on why this small region has such a big impact on everything. So gas prices, farming products, and even anything that contains plastic, basically.
We're joined now by Janelle Dumalawan. She is our DW US correspondent joining us from Washington, D.C., and Khalil Azim. He's the director of the MENA Futures Lab at the Atlantic Council.
The situation on the ground, the Strait of Hormuz being controlled by Iran, potentially controlled by Iran, at least at the time of our recording. What has been the US response to this?
Hi, guys. So we've heard a few things from the Trump administration with regard to this. So one of the things he said was that he was going to get the U.S. Navy to escort ships through the strait as a form of protection to allow them to get through. At the same time, there is something called the U.S. Development Finance Corporation that said it was going to offer support to shippers as well as to insurance providers to allow trade to go through unimpeded. But the thing that has to be said here is that the details have mostly been sparse. We don't know exactly how that's going to work. And there are a few questions as to how effective that will be. So, for example, on this question of Navy escorts, are there going to be enough warships to go around? Because we're talking about a lot of tankers down there. And also not a lot of them are U.S. owned.
Khalid, for someone who doesn't deal with the Strait of Hormuz on a daily basis, why is it such a big deal? I mean, when you look at it and you imagine the Persian Gulf as a balloon, it's like the Strait of Hormuz is this tiny outlet where everything needs to pass through. And what is everything in this case?
So everything obviously is our oil and gas, and I think roughly about 20% of the world's oil and gas transits through that space. Now the oil and gas markets are global commodities, and they're priced globally. So if there is a constraint, supply shock on the global supply and demand curve, then it's problematic and has a direct impact on price. We have been in an environment where we've been a little lucky in that the demand side of the equation has benefited from being well stocked, well supplied from users. Most of the oil, as you know, goes to Asia. And there's been a lot of capacity and supply built up in Asian economies. So it could have been much, much worse. That said, oil price is, over last I checked, $82 a barrel. Certainly elevated. Could it go above $100 per barrel? It might, depending on how long this situation lasts.
I don't want to ask you to look into a crystal ball necessarily, but I'm wondering, what are the factors you're keeping an eye on to tell us how expensive oil could get? $100 a barrel is always kind of this line that we hear in headlines. Is that a risk right now?
It's certainly a risk. The question is, what probability, do you want to place, that we get there? I think the markets overall are pretty sanguine on that risk. So if you look across the board, from equity markets to rate markets to credit markets to even currency markets, right now the markets are not discounting, an extreme situation. In the beginning, the first couple of days of the crisis, there were some sharp sell-offs, and obviously volatility has gone up, materially. And as you know, volatility is a measure of risk. But none of that has percolated substantially to the point where it's heightened by any means.
Other OPEC members said that they will boost production, oil production. Will this stabilize things or not have so much effect on the situation?
Well, it will help. As you know, the commodity markets are globally set. So you look at aggregate supply and aggregate demand. But the question really is, can they get the product to market? So if they can increase the supply is one thing, but they have to also store the supply. They have to load ships with the supply, and they have to get those ships out to market to end customers. So the question in and of itself, has to be thought of in the broader context as to actually getting into the marketplace.
You also mentioned it's not just oil that is affected by this disaster closing of the Strait of Hormuz, but also LNG. As you said, Europe has shifted away from it a little bit, but I mean, still dependent on it. The US is also a major exporter, and so far it seems that like American traders of LNG have like shrugged off this major problem a little bit in the Middle East. Is that also your assessment of the situation? Is the US profiting from this in that way?
Yeah, I mean, so the U.S. was smart or fortunate, depending on how you want to categorize it, in the build out of LNG production and its ability to export. So they're picking up, had the capacity to pick up some of the supply constraints, and so that's to their benefit.
Janelle, I want to briefly look at markets because I know we have to let you go in a few minutes. International markets tumbled on the news of the war at the beginning of the week. The U.S. markets really seemed to shrug it off. Why this divide? Did the U.S. markets anticipate conflict, or is it kind of baked into how companies are assessing the Trump administration 2.0?
I mean, that's quite a long series of questions. And, I hate to just be like, yes, but yes. So it was widely anticipated that the strike on Iran was going to happen at some point. The Venezuela example taught us that you just don't move that amount of military muscle into one place to then not use it. So in that regard, there was a certain level of pricing in that was going on. And I believe, we have touched on it a little here in our discussion, the degree to which the U.S. is much less exposed than, say, Europe is or Asia is. And I think that played a role as well. And yeah, I think there is this part of it where U.S. markets simply are getting used to Trump, where volatility has become part of the norm. And there is a certain way they are rolling with the punches because there are a lot of punches.
So I'm wondering, is there a fear from people you're speaking to in the U.S. about a return to inflation if we see something as destabilizing as a war in the Middle East?
Yeah, I mean, as we're seeing, one could beget the other, international conflict and high prices. And we have been talking about how this could raise the cost across the board, from airfares to shipping to grocery prices. And, there was actually this poll that Morning Consult, I believe it was, did when the strikes happened on February 28th. And they found that 63% of Americans surveyed said that they were worried about what the war on Iran could do to gas prices. But we've been saying all along, right? Like, so this depends on how long this goes for, how severe the conflict ends up getting.
We've talked a lot about fossil fuels, oil and gas, but I'm wondering what industries are also exposed, in your view, to this conflict in the region?
Well, the tourism industry is taking a huge blow in places like the UAE in particular, where it's a massive amount of their GDP. And it's virtually shut down. Travel is completely at a standstill. Actually, I have a colleague of mine who's stuck in the UAE, or we're trying to get her out. There are, that is the most prominent industry that comes to mind that is being impacted.
I started to dig into this week's story a little bit, was how services is such a growing sector in the region, and regional Amazon data centers have been struck and have been collateral or possibly targets in this war so far. As the time of recording, 2 Amazon web service data centers in the UAE were directly struck by drones, and one of Bahrain's Amazon facilities was damaged and taken offline. How important or how vulnerable are these kinds of service centers to these attacks?
They're extremely important. How vulnerable is more of a national security question that I can probably answer. But it's not just it's not just power stations and data centers. It's even things like water purification plants. There's basic just living necessities that are critical to the daily life of the populations in this region, and impacting the ability of the population to lead a normal, productive life will have a huge impact on GDP. If people don't have access to power or water, and are constrained in other ways from living their lives, then obviously the economy is going to be detrimentally impacted. The question is, when do you get to a tipping point where there is something more systemic which triggers its impact on the region, on the economy? And I think, as you may have read Malcolm Gladwell's book Tipping Point, that one of the insights of that book is that you don't always know the tipping point until after the fact. So it really is a function of when do we get to that point. 3 days, 6 days, 1 week, 2 weeks. It's hard to know, but it's not infinite. There's going to be a point where there is going to be a systemic impact, which is going to have a longer, more durable consequence to the economies of the region.
Last year, there was the 12-day war with Israel. What would you say from your perspective, like how fragile is the economy in Iran right now?
So I think before the launch of this campaign, the economy was very fragile. I think the one metric, one variable to look at closely is the bump up in inflation. I think some of the data is not always very clean and easy to see. But the last time inflation has bumped up to these kind of levels is right around the time of the late 1970s, right before the revolution. So periods of heightened inflation are very, very problematic because it doesn't just impact the protesters on the street. It impacts the regime. Everyone's pocketbook is impacted. The $100 you thought you had in your pocket all of a sudden becomes a fraction of what it was before, and then that creates kind of this cycle of concern and impact, and potential systemic changes within government itself.
Hey YouTube, thanks for checking out this preview of The Dip.
If you want more, watch the playlist, which is somewhere over here.
Or maybe down there. Or of course, you can check out our full podcast episodes. You can do that by scanning the QR code on your screen or checking the link in the episode description.
But until then, thanks for watching
The Dip.